That's funny. You always have to put the button. It's early. I've only had one cup of coffee. We have a ton of stuff to talk about today. If the stock market has been banging you around and beating you up, today is a day to really be in tune with everything. The FOMC is really what we've been waiting for. Will they raise by 50 basis points? Will they raise by 0.75 basis points? What does that mean for this week? And more importantly, over the next 6 months heading into the back half of 2022, I think we have a pretty solid game plan. The one thing I do want to say is that if the stock market has been beating you up lately, I can't stress this strongly enough. You need to pay attention to that kind of stuff. And if you don't have a good read on the market, if the market is just unreadable, the stock market is telling you to slow down. The stock market is telling you either to be in cash, reduce your position size, or to trade for quicker profits, which we've been calling cash flow. So with all that said, we have a lot to talk about today. The WDC announcement that came out yesterday about possibly splitting them into two companies. FOMC announcement at 2 o'clock Eastern time today. Earnings that came out yesterday in stocks that have bearish order flow that rallied. The one sector that was super strong yesterday that we're going to take a look at, and we're going to rotate into a big list of stocks that are tradable for today. The thing that we want to talk about with stocks with the catalyst today, the stocks that reported earnings, they have bearish order flow with a bullish earnings catalyst, which means that you really need to drop down and do your tape reading on that micro time frame, which essentially means today's price action. We got a lot of stock picks that we're going to talk about today. We're going to get back into rotation in a way that how does it play out now heading into the Fed announcement and then what happens after the Fed announcement. If you remember earlier in the week, which was actually on Monday, this was the topic of conversation that we brought up and whether or not the Fed was already priced in. Now, we got a bunch of questions about that and exactly what does that mean? And it really comes down to this. Anytime you're going to make a trading decision, whether it's even if it's an investment, quite honestly, but we're mostly really working on timing our entries and exits with precision for shorter term trades. It could be an hour, it could be for a month, but you really need to time your entry as close to the optimal entry as possible. And it really comes down to the pre-FOMC announcement and after the FOMC announcement of what that means for which industries and stock-specific ideas are going to be tradable. So we're going to walk through a lot of stuff today. So buckle up. We got stock picks. We have stocks on the short side of things. What everybody, I believe, is expecting right now. And again, this is getting into, is the Fed already priced in? And we just want to go back to the charts because this is really more of a trading lesson before we get into the stock picks because it's going to be a part of the timing. So this is actually 2022, right? This is the last Fed announcement over here, all right? We hit the support level after this selling, and then we saw rallying. And again, if you remember what we talked about here, we said, is the Fed already priced in? That means that was this selling anticipating the Fed announcing that they're going to be a little bit more aggressive, which in this case here was raising by 0.5. And this is really one of the biggest challenges that I see with new members who come into our community is they just don't look and say, what has the stock done just prior to me buying this stock? Is it going down prior to this news coming out? Has it rallied hard prior to the news coming out? These things have to factor into your decision. So if everybody right now is looking at the market going down, taking this big, gigantic hit because they're raising interest rates, the fact that the market went down prior to that does mean that it's priced in. So we have two very, very different scenarios right now. And again, we talked about this over the weekend. We definitely talked about it on Monday, which was the fact that we had this selling. We came into this week saying 416 is going to be a big level. We're clearly above 416. Again, let me actually go over to the SPY. That's a little bit easier to read. And we bounced down. So we're $2 above that as of right now. So what we are having is what we mapped out. So there's a very important lesson here is that if you want to elevate your trading to different levels, and more importantly, if you want to improve your skills and take control over the outcome, it's critical that you say, this is what I expect to happen. Both sides, meaning if it moves in your favor and if it moves against you, you have a plan for both. In this case here, and I want to make this point very, very clear, we said that we were expecting the market to rally this week into the Fed, and if they announce 0.50, we expect a short-term rally. I don't think it's going to be as severe as the one that we got last time, which was this one. But I do believe, and again, let's pop in the 50-period moving average here. I do believe that we're going to end up somewhere between this 428 and 432 level before we start to see this again. So again, John Bates actually is on the call right now, and he made a call on his game plan meeting yesterday morning where he was looking for a stock to rally, hit resistance, and buy it in that window, and then look to short sell it after it hit that resistance level and head back to the downside. And that's kind of what we're looking at right now in the market, where I think it's universally accepted that we are going to see a short-term rally. Now, why are we going to see a rally if they're raising interest rates? Because you'd be like, well, that's not good, right? They're raising it because inflation is running hot. So let's take a quick look at that, and we'll jump over here. So again, expectation, that's the big thing. It's what's expected to happen, right? But this is what we have to pay attention to after, okay? What actually are they going to talk about after the announcement? So if you've never traded a Fed announcement before, it's pretty wild, actually, especially today because there's so much indecision. You're going to see this. You're going to see back and forth, back and forth, back and forth, and then it's finally going to pick a direction within the first 15 minutes. Then there's going to be a lot of conversations about what they expect to do for the rest of the year, like you just saw in this article here. They're actually talking all the way out to 2023. So very similar to what we talk about with earnings. There's what's expected and then what they forecast. So in this case here, and forecast for stocks means earnings. We're going to get into a couple of earnings, especially AMD, which is closing in on $100, looking pretty darn interesting with good volume also, by the way. So here's what I want to talk about. If everything I just said just made your eyes gloss over and you're like, I can't track all that, this is nonsense, that's a signal. That's a signal right now that might not be the time frame that you want to watch the market. You might want to be on a little bit of a higher time frame where you take out all that noise, which means you probably don't want to watch intraday charts. You probably don't want to be day trading, especially in that environment. Maybe go out to the daily chart and probably work your way over to the weekly chart. That's a big thing that a lot of traders need to learn, is that you don't need to trade every time frame. Day trading kind of gets the publicity. You know, it's the thing that everybody wants to do. A laptop on the beach, 2 hours a day, and just print money. Day trading is a skill, and it takes a lot of skill to do that. The wider time frames, the swing trading type time frames, it can be a little bit more chill. Now that comes with different risk, which is the overnight risk as well. So I want to give you all of the perspectives of you looking in the mirror and say, which of these instant news stories do I want to pay attention to? Do I want to trade it at 2 o'clock when it comes out? Do I want to wait an hour and then hop on board? Do I want to wait a couple of days and then see where we go for the next quarter? You need to make that decision because the trade objective that you have will dictate which news and which time frames of order flow that matter to you. So hopefully I'm giving you a little bit of a suggestion, stuff to think about in your game plan. So that's with the Fed today. Now, heading on over to other stories, AMD just absolutely blew their earnings out of the water, 71%, just absolutely amazing, absolutely amazing. And to see where the stock is right now, it's 96 and change, it's up 6%. So it's up here and clearly breaking this down. This is really the big thing I want to get. Let me get this off the screen right here. You need to be aware of potential changes of trend. So obviously we've had pretty decent selling in the stock, but now we've actually gone into what we call a box. So once you have this trend to the downside, and you actually had a couple of them over here where we broke the trend here and went down again, broke the trend here and then went down again, broke the trend here, and now we're stuck in a box. Now, this box is actually pretty interesting because we've just exploded out of it. So there's the top of the box. There's the bottom of the box. And the stock right now is actually trading over here. It's outside of the box. So if we're looking to trade AMD today, and this is kind of important, there's a lot of volatility. We're going to use WDC as an example from yesterday, that if you are looking to trade for short-term cash flow, if you're looking to learn how to be a tape reader and you want some structure, you need a price that matters to you. Now, you might be saying, well, tape reading is tough. Is that the stuff that goes across the bottom on CNBC? That is not tape reading. That's trading quotes, but that's not tape reading. Tape reading means you're looking at a price, and is that price getting closer to or further away from that significant reference point? And that is what we call the line in the sand. Now, you might be saying, well, gosh, that's a lot to pay attention to. But you know what? You're already doing it. As soon as you buy a stock, you're tape reading because nobody on Wall Street knows better than you if that stock is strong or weak. So bringing that over into how I plan to trade AMD today, right now it's at 97. So we can move that up just a little bit higher. So it's up in this 96.59 area. That is how I'm going to read the tape. So wherever it is from that, I'm not looking to sell the stock short. I'm only looking to be a buyer. I'm looking to take advantage of the earnings. I'm looking to take advantage of their guidance going forward. Everything was amazing. So wherever that opens, right now it's at 96.59. As long as it's above that level, I'm good. I'm going to look for buying opportunities today and for the rest of the week. Now, we've seen a lot of stocks that have reported where they've had these massive gaps to the upside, and immediately they come and just melt all the way down. So you just sit back and you don't do it. Remember what I just said a couple of minutes ago? You need to have structure in order to trade with conviction. Now, that doesn't mean they're always going to follow through, but here's the key that a lot of traders mess up is you don't have a plan for how to know when it changes. That's the key. So I just gave you the game plan for how I'm looking at AMD today, and hopefully today and the rest of the week, we see follow through and we'll know with conviction that the earnings buying pressure, which was amazing, is still valid. So the terminology that we use in our Discord communities will say that it caught a bid. Caught a bid means that buyers are holding it there and paying higher prices. So if we go to the chart of WDC from yesterday, and we're going to zoom this out a little bit more so you can see what WDC did yesterday. And just to give you some context, here's the daily chart, right? That's the difference between where it was. And if you didn't happen to see the news yesterday at WDC stock, they were talking about splitting it in two different companies, which is pretty interesting. But if we do the same exact thing that we just mentioned about what we're looking for here, this here is the opening price. So that's where it traded. So immediately within the first 15 minutes of the day, as a day trade, it started to trade down. So in that sense, when it's not doing what we want it to do, we just leave it alone and then we look for other ideas. But now here's the big thing. You need to set an alert because you could be on your keyboard typing. You might be looking at a stock over there, a stock over there. And then the stock you game planned did exactly what you expected it to do. But you need to know what price matters to you. So while you're trading during the day and the stock starts to trade down. Now, again, this is all within the first part of the day. You need to know that the opening price here got violated again to the upside. And what's kind of cool about this is look how this thing rallies and pulls right back to that same price. It's not coincidence. So regardless of this giant move to the upside, we know that this $60 level is the play. As long as it's above $60, then we drop down and we look for our entry prices. So I'm forecasting what I'm planning to do. Actually, scripting is probably a better way to put it. That was a $2 move off of that significant level by reading the tape in WDC yesterday. Today, we're looking to do the same thing in AMD. So if AMD opens higher, and let's just say 96.50, just for the argument's sake, and it's above 96.50, that means it's well bid. That means buyers are stepping up and they're holding the bid, and I will have conviction to be looking for spots to buy, to look for follow through. If it opens at 96.50 and trades below that, I'm fine. Then I'll just set an alert at 96.50 and wake me up when it gets there. Only then does it matter to me. That's what separates somebody who thinks all of this price action in the market is chaos from somebody who says, I know exactly what I'm looking for, therefore I'm not lost anymore. It's that structure that helps you improve your trading skills. Remember, and raise your hand if this is you, 2020, 2021, absolutely amazing. The market just kept ripping to the upside and you really didn't need to have a lot of structure because the market was bailing you out quite a bit. 2022, the market has changed dramatically. This is when you need to have that structure. This is when you need to have the game plan. This is when you need to improve your skills because this market will make you the best version of yourself because it's not easy. It's fun when it's easy, but this is the market condition that if you can navigate your way through this, understand order flow, understand how to read the tape, have structure, and understand how to script out a game plan, that's going to make you a very special person in the market because then that puts control back in your hands as opposed to, it was beautiful, but as opposed to waiting for the government to create this giant move to the upside because as soon as it changed, get a lot of people calling us and telling us, I'm lost, I have no idea what to do. And they've lost a small fortune since January simply because they have no structure for what they need to look at. So again, you need the guts to say, this is what I expect. If it happens, you trade. If it doesn't happen, you're in cash. Let's take a look at some other ideas for today. Starbucks. Starbucks on the daily chart. Actually, let's first talk about the Q2 earnings were in line with expectations. So again, did not blow away the expectations. That would have been nice if it did, but very similar to Facebook, Starbucks did not have very big expectations. Same as Facebook. Facebook was getting beat up and they just had to come out with anything positive and the stock was going to react positively. And that's exactly what happened. Facebook just barely squeaked by with higher subscriber rate, even though the earnings and everything was not good. So the bar was set so low, they came in and the stock rallied. Same thing is actually happening now with Starbucks. So if we take a look at Starbucks, and I should actually go out to the daily chart to give some context here, you can clearly see that the stock is in bearish order flow for a while. We actually tried to break this here and we dropped this down. So that's actually where it traded, and it looked like that was where it was going to trade, and it didn't hold. So we actually ended up pushing down. So now we're actually here again on this shorter time frame, and we are now looking for this trend to break, which actually it is doing right now, because right now you can see it's up at 79, which is all the way up here. So we're kind of halfway back all the way up. So is Starbucks a buying opportunity or a sell short opportunity right now? Well, we have longer term bearish order flow, very similar to FB Meta Platforms, very similar to what we just saw in AMD. Longer term bearish order flow versus a bullish earnings catalyst. So we talk about this a lot. And again, I want to try and teach you how to have control over what you're looking at so that you can definitively make a decision on how you plan to trade that. Bearish order flow, which is going on for months, if not weeks, but definitely months, versus 1 day of buying. And actually, the market hasn't even opened yet. This is pre-market buying. So it's yesterday afternoon and today. Months versus 1 day. Which one is the dominant force there? Clearly, it's not harmony. We have conflict there, which means that you have to take into consideration from a risk management perspective that you're fighting the dominant force of the market right now. It's a great story. It's interesting, but now you need to rely on your tape reading skills to say, how do I plan to trade this? This is by far the biggest mistake or challenge that people have when they come into our community is it was going up and I want to buy it because it's a great news story. It's going to the moon. I watched Kramer last night. I was on all these other sites last night. It's definitely going up. You still, even if you believe that in your deepest part of your heart, you still need to manage the trade. You still need to look both ways and understand, how do I know if it's not following through? And we got a good example from Google, actually, and a lot of other big cap stocks that reported their last earnings, which was up here. This was the last earnings report in Google. And this is actually a perfect example of what we're talking about. From here to here overnight, all of the numbers were absolutely amazing. That's where it opened, and that's what it did over the next several weeks. So you're starting to see here how understanding it's kind of like the tiniest bit of tape reading. There's a lot more to it, of building an argument and putting the market internals in there and all that other stuff. But can you see how this would at least give you control over knowing whether or not the trade is still valid? That's a big thing, because if you understand, yeah, it's a great idea, but they did not hold the bid, why would you be buying when the smart money is not holding it up? It just doesn't make any sense. And I think this chart of Google is probably one that you want to take a snapshot of, because that's a really great example of blowout numbers that were awesome, but the bid did not get held at all after that happened. So whether we're talking about WGC yesterday, whether we're talking about AMD stock today, whether we're talking about Starbucks stock today, we can absolutely still look for buying opportunities as long as they hold the bid. So please, you want to write down that terminology, because you want to sound like you were on my trading floor in New York City. You want to be able to call it out. If you happen to be in a trading community like we have in our Discord community, you want to be able to say Starbucks is holding the bid. Holding the bid then conveys to everybody else in your community that that stock is showing bullish order flow and it's following through, which is kind of exciting. All right. So we're going to work our way over into another idea, which is Airbnb. Airbnb actually had record revenues, which is pretty awesome. Nightly bookings and higher prices. Obviously, they are benefiting from the world starting to get back to normal. Big numbers here. And if we take a look at Airbnb and set up what kind of follow through we're looking for here, It's actually up 7.4, $7.4 and 5%, which now it closed here and now it's at 152. Actually, let me get these off the screen. There's a lot of stuff going on here. So let's actually map this out. Let's take a look at Airbnb differently than we were looking at with Starbucks and AMD. Both of those were in bearish order flow for months. So there was a dominant side to the market, and that influenced our position size and how aggressively we plan to trade that, because months versus 1 day. The 1 day is awesome, but it's 1 day. In this case here of Airbnb, there is not a dominant force. You can actually see that we've kind of been sideways. I'm willing to bet if we throw the 50 in there, it's kind of, yeah, look how it's kind of neutral there, right? So what does that mean? How is that a little bit different? Well, we're not fighting bearish order flow in this case. We're not fighting all of this selling. We're just kind of literally stuck in the middle of this trading range. And right now it's going to open up right around here at 152. So are there any significant numbers here? Not really. Over the last several months, and we've been going back to mid-February, we're kind of smack in the middle of this trading range. So there is literally no bias at all. There's no bullish bias. There's no bearish bias to the stock right now. In between earnings reports, it's been as neutral as possible, waiting for this to come out. So sellers did not take control. Buyers did not take a chance. But now earnings have come out in the stock that's been neutral from last earnings report to this one. I'm going to actually be looking to be a little bit more aggressive. And when I say aggressive, I want to be clear about what aggressive means. It means three things. It could mean more share size. It could mean hold that trade longer, or it could be building into that position. There's three different ways of being aggressive. I think holding the trade longer is probably the, I'm not going to say safest, but probably the easiest way without taking on more risk, to understand that if we get follow through, if they hold the bid, I'm going to hold it a little bit longer. So it's kind of cool because they all reported good numbers, but there's a difference in the order flow prior to that coming out. We all know now as a community here on YouTube that that's the level we're going to be watching wherever it opens today, which right now, Airbnb 152.40 up $7.40. That's the level I'm going to be watching in that stock. So there's a ton of stuff unfolding today. I want to point out the energy stocks, which have actually held the bid over the last couple of weeks as well. The consumer staple stocks, which we've been talking about, have not held the bid at all. As a matter of fact, they've been pulling back. We've been talking about Costco and Walmart. And let me just put the 50 in here just to give you a little bit more context. We were fully expecting this. This bullish U-turn was one that we were looking for after this all-time high pulled back. This bullish U-turn is a momentum reversal candle. So again, I want to point out there's a difference between order flow, there's a difference between tape reading, and there's a difference between reversal patterns. Order flow is the bigger picture. Tape reading is understanding how to build that argument. A bullish U-turn at significant support, which in this case for Costco is the 50-period moving average. It's a reversal of the recent momentum. Momentum is the recent price action. So you have longer-term order flow, a pause, and then a momentum reversal. Now, the key here is it did not follow through. This, fully expecting this to retest up here, it actually melted down a little bit harder. So this is another sign from the market. What should be going higher as interest rates are going to go higher and inflation is trying to be tamed by the Fed, the stocks and the companies of stuff that we need no matter what, which is consumer staples, consumer defensive, whichever way you want to call that, should be going higher. But they're not right now. Which stocks should be going lower in this kind of environment with higher interest rates? Because growth stocks have to borrow money. Those are usually tech stocks. Well, tech stocks are going higher right now, which is pretty darn interesting. AMD, a tech stock, going higher. So what's going on? The market's in a tizzy right now. It's all backwards. Nothing's happening that's supposed to happen, right? Or is the market sending us a sign? See, this is what is going to separate you from somebody. You go to a barbecue. It's, Memorial weekend's coming up. You're going to be talking to your friends at a barbecue and be like, they're going to be, oh my God, the market's all over the place. I'm scared. You are going to know exactly what's happening because you now understand how to read order flow. You now understand the concept of tape reading, and you're going to be in charge of how you attack the stock market because nothing's confusing to you at that point. It's really simple. When you get into a trade, you understand tape reading because you know if that stock is strong or weak. What we're trying to do with tape reading and these stocks that are opening higher after earnings, we're trying to read the tape before we get in the trade so we know if it's still valid or if we know that it changed. Think about that. Isn't that really the biggest secret that everybody wants? Control. Everybody wants to see their account grow consistently. Everybody wants to improve their trading skills. But really, we want all of those things because we want control over the outcome. So if you can visualize that when you put a trade on, you know exactly what's going on in that stock. You want to learn how to do that before you put the trade on and know exactly if it's still valid or if it's changed. So we're going to get into that a little bit here with the energy stocks, which if we take a look at the XLE, and looked like it was dying a little bit here. We had a bunch of melted candles. We got below this key level. And then we went well bid here, which filled this gap, which is pretty interesting. You can see we're actually up here again. Now, I know there's a lot of news, right? Be like, oh, it's going up because of news. Okay, great. Who cares why it's going up? Let's capitalize on the order flow. So we're going to just take what we just learned about tape reading and use that on the higher time frame charts, which is a little bit more towards the swing trading, not necessarily looking at the day-by-day type of thing. And we're going to zoom out over here. And you can see, again, we just talked about this type of reversal pattern. So we had selling, a bullish reversal, and now this week, 2 days into the week, we're seeing follow through, and we're getting a higher move off of that as well. So which of those stocks matter to us? Well, CVX is probably one of the more popular ones that we trade, but you can see it's hugging this key moving average and not getting out of there. It's up a little bit this morning. ExxonMobil has a little bit of a different chart where it's actually well above this and near a breakout level. Some other ones that we've been watching in this group, VLO has probably been one of the stronger stocks. So again, if you're looking at sector rotation with us on a daily basis, which I hope you are, I hope you're learning how to do this all on your own. What you really need to do is you really need to start to dig a little bit deeper into the research, and you start to put these things all together on your trading platform. And you can see here, energy at the top of the list. Heading into Wednesday now, energy and basic materials. So there's a lot going on in the market right now. What's interesting is technology, which is not supposed to be having a great week, is floating up. Now, the one that I want to talk about here and end the call on is these guys right here. In a typical Fed-induced interest rate going up, inflation kind of thing, financial stocks technically should be rallying. And right now they haven't. They've actually kind of been in a quagmire where they haven't really done anything. And I can't tell you the last time I've used the word quagmire. I don't know where that came from. Let's see. Trading BP yesterday, right? Okay, cool. Hey, Todd, good morning. So anyway, financial. So I'm now, because of what's going on and the specter of higher interest rates, I'm going to be in my new watch list. I'm going to be looking at financial stocks. I'll give you the list of the stocks that I'm going to keep an eye on so that we all are on the same page. So I'm going to be looking at Wells Fargo. Now, again, you can clearly see that they're in bearish order flow, and you can see that they were stuck in a range for a while. Now, I want to make clear what I'm discussing right now. I'm not saying I'm jumping into Wells Fargo today. I'm not saying I'm jumping into Citigroup today. What I am doing, which is what professional traders do, is you say, if this, then this, if this, then this, because then you'll be a step ahead as opposed to reacting after it happens. So we now have to be thinking, which is a big part of that sector rotation that I showed you on the on that sheet. Let me go back to that really quick. You can see that how the money flows in and out of different groups from one day to the next, 1 month to the next, one day, 1 month, and 1 week. Our job is to read headlines and say, okay, based on that headline, what type of public companies will be affected the most by that? Which kind of makes it fun then to search the internet or read the newspaper, because now you're not just reading it passively, you're reading it actively by saying, how can I make money in the stock market based on this headline? So again, you have the unfortunate situation with the Russia invasion of Ukraine. Certain stocks rallied off of that. You have interest rates starting to go up. Certain stocks should be rallying off of that. You have inflation headlines everywhere, which stocks should be rallying off of that. When we talked about those for the better part of 5 or 6 weeks, that's when we were watching Walmart and Costco and these kind of things. So you basically had from the end of February into the end of May. That's 2 months, 2 months of complaining about gas prices and how much everything costs, instead of saying, how can I benefit from this? So I think these are going to be kind of fun conversations that we can have, even though it's here on social media. We can obviously have these kind of conversations about what should we be watching, what could we be watching, what could we be game planning right now, based on the type of headlines. As a matter of fact, maybe we'll do a separate live stream where we'll just have everybody bring headlines for us to discuss and talk about what kind of potential trades could be built off of those headlines. That might actually be a whole different show. That could be kind of fun. So anyway, financial stocks, and I'll give you the idea of the ones that are going to be on my radar. We just talked about Wells Fargo. We just talked about, we're going to also look at Citigroup, JP Morgan, and Morgan Stanley. And we might as well throw Bank of America in there as well. So again, you can clearly see these stocks that I just listed in the financial area are all still in bearish order flow. But I am getting ready if those stocks hold the bid or catch a bid, knowing that those are the first ones I plan to trade. If after the Fed announces today, are they going to be a little more aggressive, which is going to increase the margins on how those companies make money. So it's going to be kind of fun to watch these things together and game plan them out. And I think we will do that. I think maybe we will have a whole separate nightly video and say what headlines does everybody want to take a look at, and then we can make a decision or have a fun conversation around what that means for the stock price. I'll put that on my calendar. Maybe we'll see if we can do that maybe like once a week or something. So anyway, that's the game plan. FOMC today, 50 basis points versus 75, and then listen to all the conversation after it to see what they're expecting to do. The conversation we keep hearing is front loading, and that means that they're going to go heavier on the recent, meaning today and the next Fed announcement of a little bit higher than expected. We'll see. And then what are they doing the rest of the year? We have AMD bouncing today on earnings. We have Starbucks bouncing today on earnings. We have Airbnb bouncing on earnings. And we also have Starbucks actually bouncing as well. So there's a lot going on right now. So have an awesome day, everybody. I really want you to know how much I appreciate being here with me today. If you have anything you want to talk about, follow up on this, leave a comment below the video. I will definitely get back to you as soon as I can. Have an awesome day and be smart today. There's going to be a lot of volatility. Be smart. If it doesn't make sense to you, pour a cup of coffee, watch it happen. And then when it slows down and matches the way you expect the market to unfold, that's when you should get involved. Don't let other people peer pressure you into doing something. Trade when you're comfortable and when you have control over the outcome. All right. Have an awesome day, everybody. I'll speak to you soon. Thank you so much.